What's up, traders? What's up, investors? Ken here from Dyslexic Investor, and today we're going to be looking at more of the Robinhood issues the past 2 days of this week, on Monday and Tuesday. Their systems had an unknown issue. They're still not very clear on what's going on here. So if we found this via the Reddit stock market thing, but I pulled up the full article here. This is on thestreet.com. Basically, an understanding that the CEOs are working on improving the overall infrastructure, aka the servers, the code that handles the server, the basically the load of the servers, and so forth. But the thing is that it's really quite surprising. And what he said was, as our internet team works to upgrade our infrastructures, we may be experiencing additional brief outages. That doesn't sound good, but we're now better positioned to more quickly resolve them. So that means it's only going to be down for an hour or whatever. But again, on Wednesday morning, Robinhood, blah blah blah. So that's for the page. I know they have well over 10 million accounts. That's basically on the same level as Charles Schwab, TD Ameritrade, and all those guys. But they have had issues in the past week of like maybe very slow lag time and overall quote speeds, but there's nothing this crazy. And a lot of people are saying that you can't sue them because when you sign up, there's a part of the contract or the terms of service where saying anything, they're not liable for any losses of data, any of the blah 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 blah, just typical stuff. But I'm sure that the trade commission within the Security and Exchange Commission or whatever, the banking system, will have to come in and kind of slap them around a little bit, honestly, because this is really unacceptable. Basically 2 days being down on one of the biggest bounce backs in the past decade. Very sad. And so a lot of comments here. So anyone that stays on Robinhood after this, no crying aloud. And then War 321321 is, what do you recommend for alternative? He's like Fidelity, TD America, Schwab, anything but Robinhood and Webull. So that brings up another case, the Webull case. It's overall the biggest case that I could see. Is I used to trade on these platforms. I used to trade on Robinhood, honestly, before they even had options, before they had crypto. I never used Webull, so I don't know exactly what that is. I did some looking into it. It's basically a clone copy of Robinhood, just with different colors. I don't know if both of them, like, there's another one that's out that does fractional shares, which is actually very great, actually. Which is this is the Street article here with Jim Cramer actually makes a very positive effect on fractional shares, because now people are able to buy Amazon at just for $10, like they would as a full half of Bitcoin or 0.000 of a Bitcoin. They can do that now via the Amazon stock, which is great. So now they're not stuck with buying Ford, GE, Rite Aid, these lower valued stocks that probably usually don't perform the best. So that being said, the trading partners that they're recommending, these are all pretty good. I use TD Ameritrade, which I use with my linked Thinkorswim here, and then I also use Tastyworks, which is more for my options, and I do some equities in there. But I highly recommend checking out both of those. I have a link down below actually for the Tastyworks account, and if you're into options, I think it's by far the best. It's not completely free, but it is very well run. It's $1 per contract to open, and it's $0 to close. That being said, definitely check it out. Do your homework. I'm just trying to give like a PSA on the sense of be very careful, because it's sometimes too good to be true on the overall market on these apps that are completely free. Like, you're getting what you're paid for. Like, yeah, you might have made double your money, but now you could have lost a lot of it due to the fact that the platform that you trusted is no longer accurate. And the key point is the spokesman said that the company is reaching out to customers with information on how to contact Robinhood so they can work out a deal on a basis on handling compensation for outages. This may include billing credits, which I don't know what that means. You're going to give me Robinhood Gold for free? You're going to give me free margin? Not sure what that means. If I had a limit order in and it clearly should have triggered, you should be obligated to give me that and pay the difference or pay me for that. That's exactly what Tastyworks did. Like, I was in some Facebook contracts. The system went down for about an hour, maybe 90 minutes. I was not able to execute my Facebook contracts. Bada bing, bada bang. They said, no problem. We saw that you had a limit and it should have executed, but our system was down, so it didn't. Here's what it would have cost, or here's the profit you would have made, and boom, right into my account. So I'm just giving my honest opinion. Tastyworks is what it is for me. I completely love it. I'm completely loyal to them because of that and other factors of how they operate, and they're really honestly made for the retail investor, which that's what I am. I just want to do a little quick market look at here. We're looking at SPY, and actually before I forget, I need to recommend something, so let me pull that up here in a second. Let me get this video. Alright, it's actually this video right here. This is actually the YouTube channel. I'll put it in the link down below. It's Leavitt Brothers. This is Jason, fabulous individual. I've been following him for quite some time. I haven't actually met him in person or anything like that, but great technical analysis. This is a great video down below. Again, I'll link it in the description. He kind of gives his technical understanding of how the bounce back could or might be happening compared to what has happened in the past, and compared to 87 due to the tech bubble pop, due to the housing and financial crisis, and how these markets have moved so fast, and how this is kind of looking at other previous factors of circumstances like this, because it's really hard to kind of stitch fix something together that fits this criteria. So that being said, let's go ahead and look at some markets here. A couple things I got my eye on. I got my eye on Tesla. Like, this bad boy needs to do something here. The 5 crossed over into the 8. That was the overall down of the overall market, but now things are kind of leveling off on the daily chart here. You have the 5 trying to break out underneath the 21, and the great thing is the 8 hasn't crossed the 21 yet. If the 8 crosses the 21 and it's fairly steep, that might be a sign that scares me. Let's look here on a daily chart. We are nowhere near oversold, so meaning that we could have it potentially leg lower. You kind of see my alerts here. So anything above 800, I have something at around 630. Could potentially touch this again. I believe that could hit this. I hate to say this, but I'm kind of predicting that it could hit 400 again, potentially. That being said, things look like it's kind of trading sideways now, so I could see it easily trading between 800 and 700 for the time being until we get more news about Battery Day, the Gigafactory in Berlin, and so forth. Just really very bullish on this, and just honestly just want an opportunity to be able to get in and buy this sucker, because it is just a fantastic stock. And here again on the weekly, this standard deviation just still trading well above the 3 deviation here. Things have not really slowed down. Things just need to kind of catch up with this before it kind of takes off to the next level, I believe, because a lot of things has already been moved in this market. Another stock that I kind of got my eye on is Disney. I did add a little bit to this the other day because it's a core position, and it just kind of looks absolutely disgusting in the sense of it's well below its 200 on the daily. If we pop back on a little more understanding here, on the RSI on the daily, it's oversold basically 2 or 3 days ago, which this is very common on a lot of charts, but it's not so far past the 200-day moving average. On the weekly chart, it kind of makes a little bit better sense. It kind of stopped at its 200 moving average on the weekly chart, and it has been support multiple times on the weekly chart. So this is kind of where my standing is. So anything at or below this, I'm going to have to trim some of the position because it's not going to be worth holding. I can make my equity elsewhere. So I'm just going to be adding a little couple alerts here that will ping my phone on things that happen. I kind of just be more proactive and then just kind of react and let it come to the prices that I want. So that's kind of like on Disney. Microsoft is actually one thing we added to the portfolio as well. So let's go back to the daily chart here. Completely sold off like everything else, but it never touched the 200 on the daily. That can be significantly sign of strength. The moving averages are not properly stacked like the way I like it, but they're not pointing south or pointing towards the ground. They're starting to kind of curl up and potentially point to the sky again or trade sideways. I think honestly, like I said with Tesla, a lot of these high performers, I can see them trading within a range, because anyone you talk to technically understands that we probably need to touch near the bottom, so the 155 level possibly, within Microsoft, to see if we can kind of wash out some of the people who jumped in the last week or so, or last 2 or 3 days. It wasn't anyone on Robinhood, if you know what I mean, that was able to get into Microsoft the last 2 or 3 days. I'm sorry, that's kind of too soon. I really do feel sorry for all you guys on Robinhood. I know that's a completely crappy situation, and I wish the best for you guys. So that being said, back to Microsoft, we want to look at this. This was also not ticked to the very bottom, was oversold. But once you pop it out to the weekly chart, it makes a little bit more sense, and it's well above its 21 on the weekly, and it has just been pretty stagnant on this, minus the 18 kind of sell-off, which didn't go too crazy, but it still did fairly well and held up quite a bit. So this is a new large position that we added within the portfolio. And last but not least, we added some AMD as well. We have AMD, we added it to a couple days ago as well. Again, I'm not having a full-on position, but this kind of looks exactly like Microsoft. Didn't go down to its 200. Things are kind of curling up, getting ready to go higher, and potentially getting back up to its all-time highs. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor. I'll catch you guys on the flip side. Peace.